US ports and air freight hit hard by Trump's tariffs, trade war impact explained. Imagine a world where global shipping lanes get disrupted overnight. That's exactly what's happening now. The ripple effects of Donald Trump's trade war with Beijing are hitting the US economy hard, especially at its busiest ports and busiest air freight routes. As tariffs skyrocket, some hitting 145%, businesses are feeling the squeeze, with freight volumes plummeting and supply chains rewiring themselves faster than anyone expected. Since those hefty tariffs were slapped on Chinese imports, container bookings to the US have nosedived. The Port of Los Angeles, the main gateway for Chinese goods, is bracing for a third fewer ships arriving the week of May 4 compared to last year. And it's not just ships, air cargo slots are also drying up. Mid-April data shows bookings for standard 20-foot containers from China fell a staggering 45% compared to the previous year. Why the sudden drop? Many traders are choosing to wait and see if Washington and Beijing can strike a deal to ease the tariffs. The International Chamber of Commerce highlighted how this uncertainty is causing traders worldwide to pull back, with expectations that the high costs of accessing the US market, expected to be the highest since the 1930s, are here to stay, with minimum tariffs now around 10%. Both countries have started softening their stance a bit, announcing some exemptions for key products and Trump hinting that tariffs might come down. Still, China keeps its officials tight-lipped about talks, leaving everyone guessing what's next. Meanwhile, supply chains are flexing as companies shift shipments away from China. Some are delaying orders, waiting to see if tariffs will drop, while others are stockpiling goods in warehouses where they can store products without paying duties for now. Asian hubs like Vietnam and Cambodia are filling the gap, enjoying a brief reprieve from tariffs, so much so that freight rates in those regions are climbing, in anticipation of more exports. The impact isn't limited to shipping containers. Air freight, crucial for high-value or time-sensitive goods, has also taken a hit. Bookings are down about 30%. E-commerce players, like Shein and Temu, are especially affected as rules change make importing smaller parcels more expensive. Big logistics companies report cancellations and reduced orders from Chinese clients. Hapag-Lloyd, a major container line, said Chinese customers cancelled around 30% of their bookings. And some US carriers are even suspending services to the US West Coast altogether. All this has led to a rise in blank sailings, scheduled ships that simply don't turn up, causing more chaos and delays. What does all this mean? Fewer containers are arriving from Asia, and ports like Los Angeles are seeing fewer ships than usual, down by as much as 25% in just a few weeks. Companies are trying to front-load deliveries before tariffs possibly rise again in July, which drives up container prices in places like Vietnam. All these shifts are starting to hit the broader economy. Freight volume forecasts show expectations of lower shipping and fewer imports. The trucking industry, including giants like Knight-Swift, is already warning about declining volumes in May because of all the uncertainty and shifting tariffs. And it's not just trucks and ports. Consumer behavior is also starting to change. With prices rising and spending softening, even retail giants and e-commerce platforms sense a slowdown in demand. Experts warn that we might be heading into a tricky period where higher costs meet cautious consumers, leaving everyone to play a waiting game in this high-stakes trade chess match.